Good morning, Portfolio Builder members. Our portfolio just had a huge gain this morning thanks to having nearly half of our portfolio in the TLT ETF. US had a low PMI print, causing stocks to sell off after opening up higher this morning. And now the put option hanging below our SPY is in effect, and we are no longer suffering any pullback in terms of return below 295 on the SPY. Meanwhile, in today's trade alert, we're going to talk about silver really quickly. I have a short introduction about our program and service, and then we'll jump into today's top news and our current trade alert playing the silver market, which I think has a huge boom ahead that will last likely anywhere from 2 to 3 years. Extremely easy, on-the-go, 30-second daily retirement trade alerts. Target return on investment is 1% a month, and we've only had one losing month of negative 1% with an average of 1.6% per month. For every $100,000 invested, our goal is to generate a $1,000 profit per month. Income and safety, not growth or speculation. Our strategy is extremely conservative. Our simple 4 ETF portfolio is also extremely diversified and all you'll need for your retirement. Simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. If you're sick and tired of your purely equities portfolio going up and down in value, I think you're going to find our service extremely valuable. My promise to you, I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. And remember, for every $25,000 you deposit at most brokerages, you'll have $100,000 of buying power. And because of how conservative and safe this strategy is, it does make sense to take advantage of every last penny your broker-dealer will lend you. The trade allocation per $100,000 is currently recommended in this allocation with 100 shares of the SPY ETF for Monday, Wednesday, Friday, 600 shares of the SLV, that's spot silver. Current cost of that is approximately $11,000. And then 300 shares of the TLT ETF, approximate value $45,000. On top of that, we recommend a buy and hold position of 10% of your total capital in GDX. Now the top three are income trades where we sell a call option and buy a put. Very conservative. The options typically act as a drag on our returns when we're bullish on our asset classes. And currently I'm bullish on all 4 of these ETFs. However, the market can quickly change direction, and when that happens, we need to have the put options below to protect our assets. Now, the buy and hold position in GDX is different. This is a long-term buy and hold position with no put options below it, so we have to be willing to have some pretty decent volatility in that position. We'll talk about why we have so much of our capital held in gold and silver. Now, I do want to point out a major difference between GDX and SLV. GDX is an ETF that holds a basket of miners around the world who actually dig up gold and can profit from these elevated prices. All year we were playing GLD, expecting the spot price of gold to rise rapidly. And sure enough, it did. It brought our portfolio significant gains. However, now that the price has jumped significantly higher, we've switched from the spot gold to the miners. And what we're expecting now is a similar play on silver. So we're first playing the spot silver, which has not had the same increase relative to gold. After it has shot up in price, expect us to switch out the Tuesday play from SLV to SIV, which will take advantage of silver mining companies. Now, if you want to trade a little less risk in the precious metals market and take out the riskier Tuesday trade, here's another allocation that makes a whole lot of sense. You trade the SPY Monday, Wednesday, Friday with 100 shares, and then you trade the TLT with 200 shares on Thursday. And again, this ratio of stocks to bonds makes it very hard to lose money. Look at today for an example. Sudden plunge in stock prices after jumping significantly higher in the futures market overnight, only to be followed up by a huge rally in the TLT, generating our portfolio a profit when most investors are scratching their heads wondering if it's time to get out of stocks altogether. And if so, what should they buy? Bonds at all-time highs? In this portfolio, you would have also 200 shares of GDX to continue to have that right allocation into precious metals. And we'll look at why we're so bullish in precious metals soon. Want to trade it super risky with the least capital? Here's your setup. We're ditching the SPY, playing SLV with 900 shares, $15,000 value, approximately 100 shares of the TLT. That's a $15,000 value, and then still a buy and hold in GDX. So that gives you three options. I'll just flip back through. If you want to trade the full program, the trades are Monday through Friday, right at noon Eastern, followed by this live stream. Takes less than 30 seconds to do the trade. It's extremely simple. It's very predictable in terms of what you'll trade, when you'll trade, how much of your money to trade it, and the options in general will act as a drag on our returns. So remember, all these profits we're showing you are after giving up a considerable amount of those profits to be conservative and safe and have a weatherproof portfolio. Now, there are times we can use the options to generate a profit if we believe an asset will trade flat or down. And you've seen us do that in the TLT ETF and SPY ETF several times this year. So once again, here's your $66,000 portfolio with 100 shares of SPY to 200 into TLT. And then your final allocation, 900 SLV, 100 TLT, and 100 GDX. So it gives you three easy to follow options to follow our program and start generating consistent retirement income. Now, if you're missing the trade alert, most likely your free trial has expired. Call Dean, 505-322-7515. He's an expert trader, follows our program. He also day trades the options market. If you want to talk shop, let him look at your portfolio. He'll give you his personal opinion on what he thinks is the worst part of your portfolio, the riskiest assets that you have no business holding. Most of the people who call in have a smorgasbord of random stocks. There's no real thought process to how you've built up your positions. You do not have a very diversified portfolio. You have no downside protection. You probably have no exposure to the bond market with the TLT. And so you're really just at the whims of the stock market going up. And we're at the longest business cycle in history for America. Although I'm still bullish on these assets right now, there's a lot of things that could change that outcome in a heartbeat. And if you don't have the right allocations, you're going to lose a lot of money. A lot of people ask us, what is our service cost? I'd ask you, how much is it going to cost you in your portfolio in the next 2 months just to close out the year as the U.S.-China trade war escalates? What if we have something like last December where we have a 15% decline? Are you going to lose $100,000? $50,000? You really can't afford not to be in our program, so call Dean, 505-322-7515. It's a low-pressure call. We'll take a look at what you're doing, explain how our program works, and get you taken care of. A few reminders, and we'll jump into today's content. Some very extreme things happened last night. First shots fired in Hong Kong. Things are getting out of control in Asia. Reminder, we have our paid member-only webinar Wednesday at 1 p.m. Eastern. Tomorrow you'll get a live Zoom link in your email about 1 hour before it starts. Thursdays for everyone. We invite everybody who cares to join us, meet other people in the program, talk about our returns, what we're expecting in the future, how we'll play these different markets, and get to know the whole system and all of our team in much more detail. So look out tomorrow. You'll automatically get an email from Zoom about 1 hour before it starts. You got to go to your email, click that link, join us live. We've had on average 20 to 30 people, and it's growing every single week. Last reminder, subscribe to our YouTube channel, click the bell, download the YouTube app. You can watch our live stream on the go from your car, from the airport, wherever you happen to be. It's a great way to get this automatically. Okay, next I want to show you guys a few more things and we'll jump into the content. Below the video are a bunch of links. You can learn about our advisory, our boot camp. You can view our pricing options, and you can also read every trade alert as well as link to our track record. So I ask you this, which advisory that you're a member on actually publishes with no password protection every trade alert they've ever issued, as well as the track record? I've been in this business for over 10 years, and I can tell you there's not a single advisory that does that. And that's because they sweep bad trades under the rug, people don't get the same results as the advisory, or they're scared. If you saw what they're doing, you wouldn't buy the program. We do the opposite. You get to see all the content for free, and then join in once you're convinced that this is the real deal. Okay, so the update link shows you this, and it's just every single post we've had. So you can go through and audit all these returns. We're not trading penny stocks or illiquid options, guys. We're trading really the top shelf. Think about getting that shot of Patron. You know, you're probably drinking Jose Cuervo. Well, we're drinking the best, top-notch, top shelf in every single asset in our portfolio. So I encourage you to go through it. Trade alerts come out at a very predictable time. The spreads on these prices are pennies, so everybody's getting almost the identical result. If you go to the advisory page, we don't have a huge sales letter. It's just a very simple, straightforward, here's our returns. Here are the breakdown of what you get. And then if you click that link, you'll go to the option page where you can get financing plans to join our program. And we think of it more like buying the Rolls Royce of advisories. This is a one-time purchase and you have lifetime access. This is not some annual subscription that's going to be a strain on you for the rest of your life. So I do encourage you to go check that out and look at all the different pricing options. Finally, if you want to not just get the fish put on a silver platter for you to eat, you want to actually learn how to fish, that's when you join our boot camp. And we do have some special trades only available in the boot camp that are more advanced, trading the futures market and doing some option spreads. So we don't do that in our advisory because it is definitely a little bit harder. But once you've gone through our 16-week boot camp, this will be no problem at all. And so if you scroll through here, you can see what our schedule looks like. The boot camp repeats every 16 weeks indefinitely. And at the end of each period, you can fly out to Albuquerque for 2 days of live trading. So definitely check that out. And that's a wrap on what we have for this. Take a look at today's trade alert. Let me zoom in. September was a little slow. You can see we only had a 0.5% return while our target is 1%. And really what has lagged in our returns that month was the SPY ETF. It is dying to break above 300, but it continues to have news wires hit that have been causing a little bit of panic, from impeachment fears to today the PMI dropping. Before that, the Aramco attack. However, we still remain bullish on this asset. We'll take a look at why and what I believe is going to happen in the near future. October already up 0.4%. What happened was we were able to close those puts on the silver position that jumped up our return a bit, and then the TLT flew higher. And as you know, that's approximately 45% of our total portfolio. In fact, actually 40% in this portfolio. So that's a huge position and continues to rack up the profits. We've almost made more money from, in fact, today we've now made more money from the bond portfolio than the Monday, Wednesday, Friday, and Tuesday play. And that's been the most simple, boring trade ever on the TLT. So we'll take a look at that. And I do suspect it can go considerably higher. The big picture is that the central banks are all rushing to print money, lower rates, and try to clear out the balance sheets on their banks. Their banks and primary dealers have been buying up treasuries at record pace, and they're now all trapped in these bond products. If they were to try to actually get out, it would cause yields to spike and probably collapse the entire financial system. So they know they cannot start doing that because it would be like starting a forest fire that would get out of control. So what are they waiting for? Well, you got it. Bank bailout. Central banks are going to come in, and they already are. We've already seen the Fed's balance sheet tick up several $100 billion this year with no announcement or explanation. And the plan is they're going to take off all the bonds for a gigantic profit from all these big banks that have loaded up on them, start up QE. The banks will have a fresh balance sheet, and unless we get a major conflict with China, which I do think will occur, it's just timing is tough, the banks are going to have a fresh balance sheet to load up on equities, and that's what I'm expecting. So we've got 80% of all central banks lowering rates. We've now got the dollar extremely expensive relative to other currencies, which crushes our exports. The Fed must react. We have a next FOMC meeting at the end of October, and Goldman Sachs has already put out a chart of exactly how QE is going to look. Now, of course, they say that the Fed is independent and here to serve Congress and the United States citizens, but we all know really their goal is to protect the banks who actually created the Fed. So it's pretty clear what will happen. Rate cuts are coming in October. Repo madness is going to continue. They're talking about a one-time booster shot of something like $500 billion to $1 trillion into the balance sheet, into the banking system, and then start up around $40 billion a month of treasury purchases. Now, the Fed can't buy it from the treasury. They have to buy it from the primary dealers. Perfect setup, right? So what happened to silver last time? Well, last time we did this, the Fed's actually been pretty good at predicting recessions despite all the bad talk. And in 2008, they started to dramatically lower rates all the way to zero for all of 2008. Wasn't enough. And in fact, we didn't stop the stock market crash until they actually decided to print around $1 trillion, and then that ramped up towards several $1 trillion by the end of 2010. And we can see what happened to the spot price of silver during this period. It went all the way to $47.50 from a low of 10. Now this time around, stocks are at all-time highs or near it. We're already lowering rates, and it's pretty obvious that there will be QE before the end of the year, especially with this print that we just had. So this is a totally new setup. And I'm expecting that we can see a much more massive rally in precious metals ever than before. Now remember, the last crisis was primarily from the mortgage industry, just concentrated in the U.S. The problem this time is a global problem. It is at least 10 times the size of debt that needs to be serviced today than it was in 2008. And so the amount of money that's about to be printed around the world, probably for the next several years, is going to most likely make 2008 and 9 look like peanuts. So if you understand the big picture, you can see why we want to be long silver and gold. Now, I do expect that SIV will be a better moneymaker for us as soon as the spot price of silver gets very high. So the same concept we've been doing with GLD, spot gold, and GDX comes into play. So that's what we're expecting. in the next 2 months, or really 3 months, and this is always sent to us from all the Fed speakers in advance, so it's never really a big surprise. So that is a look at today's trade. The exact options we're using to protect this position, which makes it far less risky than just buy and hold, are of course not shown in this video. You do have to upgrade to get access to the real trade alerts. But you get the big picture for free just for taking the time to watch our YouTube channel. All right, let me look at one thing. I do want to point out on our TLT play, we were long, and we're able to benefit all the way up to 148. So if we pull up that TLT chart, and again, we have a huge position in TLT. So here's a look at your spider crashing. Our last trade had a put at 295, so that's great news for us. Get the volatility out of the market. We'll be ready to buy the dip tomorrow, and the lower it goes, the better as far as we're concerned, because it's cut off at 295. So we're losing nothing right now as it crashes lower and lower, and we're racking up huge gains on the TLT. In fact, TLT can scream another $4.40 before Thursday, and we'd still not miss out on any of the profits. Okay, so that's a look at that part of the portfolio. Let's take a look at the big news that I've collected over the past 24 hours. Okay, so this is the most important chart in the world, and also the Chinese conversion into the dollar. This is an index product. Primarily, it is balanced against the euro and the yen, the two most highly traded currencies. And you can see it just signals that currencies around the world are quickly losing value, pushing the dollar to new highs. This has had a little bit of a drag on gold and silver in dollar-denominated terms, but what comes next? Well, I'll show you what comes next. I don't have to predict it. Chief and Commander tells you exactly what's going to happen. And this just hit a few minutes ago. As I predicted, Jay Powell and the Federal Reserve have allowed the dollar to get so strong, especially relative to all other currencies, that manufacturers are being negatively affected. Okay, and we did see manufacturing PMI drop today. Fed rate is too high. They are their own worst enemies. They don't have a clue. Pathetic. And so this is true. We have to lower this value of the dollar. That's going to make the relative value of gold and silver shoot up, and it's most likely going to be achieved by dropping interest rates and printing a ton of money. So that is also very bullish for equities. The big play here is the banks get bailed out. They get let loose on these bonds for enormous profits, and meanwhile their balance sheets become clean. So most likely, without a major escalation in the trade war, equities are going to have more money behind them than ever before in history in the next several months. Here's some ISM manufacturing readings with no recession, just to show you that this is not necessarily the end of the world with that print today, and in fact just ammo to give the Fed the reasoning to do what we expect them to do, lower rates, print money. Jeffrey Gundell manages $120 billion, one of my favorite hedge fund managers to listen to. Last 2 years, he's been ridiculously accurate. This year, he's had a tough time. He was betting rising interest rates, which, of course, the exact opposite has happened. He did call for a rally in Bitcoin, which did help us have the courage to do that. Last December, we made something like 300% return on that so far. He likes emerging markets. Now, him and Ray Dalio may have some sort of conflict of interest. I know for sure Ray Dalio has a special license to manage Chinese money. And boy, oh boy, is he going on media, doing every interview under the sun, trying to pitch people on purchasing the EEM ETF, which is an index primarily flowing money to China. And so I think some 20% of his $120 billion fund is from Chinese investors. Gundell's just saying Trump has to have a strong economy to win the election. So he's skeptical of betting on a downturn in stocks at this time. And so he's saying, what might he do? Well, he could simply just remove the tariffs near the election, and we'd have a massive rally. But first, he wants to get those interest rates down and pump up QE. So that's why I'm cautious going into the close of the year, as we know what's going to happen. Fed's going to aggressively loosen monetary policy, and the only thing that most likely will stop investors from flowing to U.S. stocks would be either a recession in earnings, which is nowhere in sight, especially with all of our domestic economy and consumer credit, or a major escalation between China. So with all of the world in a major slowdown, all of their bonds at close to zero or negative yielding, where else can you invest? And so most likely the answer will be U.S. equities here. Giuliani has been all over the news, essentially saying that George Soros had funded investigations into Trump to try to set him up in the 2016 election. We also have Patrick Byrne of Overstock, sold his shares in Overstock, went on Fox, said the same thing. And he's fled to Indonesia and put all his money in Bitcoin. And he says there's going to be the biggest Watergate scandal in history unraveling in the next several months. So we're watching this carefully. Must be every 3 hours we get a tweet about the whistleblower and the outrage from Trump regarding this Ukraine drama. Which appears to be some major scandals in Ukraine with Joe Biden and other Democrats, which is coming out now. Last night I was watching the military parade celebrating the 70th year birthday for China, trying to get a feel for whether they are looking at peace or standing their ground. And boy, oh boy, they had a huge show. I don't know how long the line of military equipment was, but it was miles long as they flew this drone through Beijing. Huge city, just tremendous. And this is what you get when you have communism and they take 70% tax on every single person, 1.4 billion people, put all the money in a pool and build huge cities. That's what they're good at. And their parade showed absolutely no weakness. This is right here in Tiananmen Square, where the famous tank man scene happened. A little guy ran in front of a tank, stopped their parade, and that person never was seen again. Apparently, people ran and grabbed him and tried to put him into hiding. Eventually, this led to a major massacre that's been covered up by the Chinese. And meanwhile, in Hong Kong, the first shots were fired. A lot of people were predicting that there would be bloodshed. It hadn't happened until last night. 2 shots fired. Interestingly enough, Bloomberg, who's very pro-China, has a ton of money from China in terms of advertising plus index products that flow money to China. All the major media has huge amounts of capital. Wall Street Journal has an entire section just for pro-China news where they pay something around $100 million a year. But we finally got the first bloodshed, and this is the communist Twitter handle. Of course, Twitter's illegal in China, but of course, it's okay for the communist leaders to have it. This scene happened in Hong Kong today. The barbaric action mob did to Hong Kong police should be condemned by the whole world. This is definitely not a beautiful side of democracy, right? And Bloomberg put out a little clip this morning of the person getting shot. I don't think this is going to go the right way for the Chinese here. I think the unrest in Hong Kong is going to explode now, and I don't think anyone's going to take China's side. Meanwhile, a huge bank, SoftBank, is having a terrible time with a lot of its IPOs and tech companies it's been investing in. And now WeWork is not going to do its IPO and is going to run out of money in the next 6 months. Absolutely insane. They had some $45 billion of, there you go, almost $50 billion of lease commitments that are quickly being canceled. And this could create a huge shockwave in real estate. So definitely keeping a close eye on that. Here's the PMIs coming in, all at the same time as the economic surprise index jumping up. Now again, I believe this is going to be food for the Fed. There's no major scare. There's no huge crisis. There's no Lehman moment yet for me to want to short stocks. A little chart about how important the manufacturing sector is for the U.S. Here's your dollar index from Bloomberg. Now, Kyle Bass wants to short the Hong Kong dollar. He thinks that eventually they will run out of money, that they are basically out of whack with the growth of China. And although China uses Hong Kong to raise capital from the outside world, you can go listen to lots of interviews. The price on the Hong Kong peg has been very rock solid during all this drama, but he believes at some point it's going to become too expensive and they're just going to let it go. And hopefully, I think even just, his forecast is that they may just let it disappear. So it's been a tough ride if you're shorting the Hong Kong dollar so far, but we may be getting to that point in time. And this is something we would play in our boot camp program. Meanwhile, if you were shorting the Chinese currency, 25% of the move I was predicting just happened in the last week, and I think it could get much bigger. The Japanese bonds had a small crash. Now they have said they're willing to print an unlimited amount of money to support their stock market and bond market. They've been doing this for a long time, and they own 40% of their entire stock market from the central bank. This was a funny tweet that actually pulled off today. This is before gold spiked this morning. Impeachment threat, UK Parliament crisis with Brexit, trade war, Hong Kong on fire, Saudi versus Iran, global growth slowdown, rates to zero everywhere, stocks up, gold down, Forex a headless choke. Help me out here. Is it the Russians doing all this? Now, of course, after that PMI print came out, stocks crashed, gold flew up, TLT flew up. A little sign of peace with the North Korean talks. This just shows the dollar shortage happening around the world. Most of the debt around the world and transactions are all in dollars. And as our deficit pulls all that money back to the United States and doesn't export the dollars, we're finding that people cannot get their hands on enough dollars, causing that index to go higher and higher. And this really is probably the core reason we have to start up QE and put a lot more dollars in the system. Here is the protester shot in the chest. Apparently he's not dead. I don't know what exactly he was shot with. JP Morgan's Treasury clients most net long since 2016. They arrested a California man who was doing dead drops for 10 grand a pop. He was getting fed fake secrets from a double agent. And then he ran this Chinese tourist outfit in Cali. In San Francisco, just got arrested yesterday. And so things are escalating. Here's a big recap of exactly what happened in Beijing. Smoggy skies. This is the most, well, it's very interesting. We're seeing that these people who have taken a lot of money from China, I think, are starting to realize what's going to happen. and they're having to get back on the U.S.'s side. So we're gradually seeing them become less and less smiley about China in terms of people who've been influenced by Chinese. So their parade, I watched a good bit of it. The CCN TV network is basically the Chinese propaganda for the rest of the world, spoken in English, and no signs of loosening up. In fact, they're parading around in the exact spot where they had a massacre in '89. Trump did congratulate President Xi, so that was a nice thing for him to do, I guess, showing maybe there is some small chance of a trade deal. We have seen the Chinese purchase farming goods, but on the other side of the coin, we've seen very little reciprocation from the U.S. at this point. And again, if you want access to this document, it is in the description box, so you can go read all of this. Their basic speech was that they have taken more people out of poverty than ever in history. They've created more wealth in a shorter period of time than ever in history. That their model is superior to the rest of the world's, and that nothing will stop them. That their military is so strong they're not afraid of bullying, and they have no intentions to really change anything. That's that's what I got out of his speech. And meanwhile, it's funny, the CCN TV was saying, oh, the Hong Kongers are all lining up to sing the Chinese national anthem, is what you get from that. Then you go watch China Uncensored, another YouTube channel, and the guy's out there with gas masks. People are listening to gunshots go off, tear gas, so it's quite a riot. Hong Kong is seeing the largest outflow of capital of all time. So the moment of reckoning for the Hong Kong conversion rate against the dollar may be coming. No force can stop the Chinese people. Now they like to call this the last 100 years the walk of shame. That may not be exactly what it is, but they look at their country falling behind as a shameful period of time, and now this is their moment to resurge as the leader of the world, like they have many, many times in their last several thousand years of being a civilization. And they don't have to worry about elections, so I'm not sure they're really going to do much. We may have to really, really cripple their economy dramatically before any changes would come. So timing, very hard to predict when the escalation will occur. But this is going to be the big story of my lifetime, is these two major powers going head to head. And the Chinese are growing at such a fast rate that if left unchanged, they would quickly become more powerful. With a $12 trillion GDP and 8% growth, while the U.S. is $22 trillion and 2% growth, you can do the math, compound the growth, and I think it's within 5 to 10 years China takes the lead. Meanwhile, they're building their naval ships 4 times faster than the U.S. at half the cost. So the Navy's freaked out. They're building islands all around the area. They're trying to just expand and dominate. So this is not going away anytime soon. Some more pictures from the parade. Here's a piece from Patrick Byrne. He was talking about what was happening in the financial system 2005 to 2008. He has an interesting blog called deepcapture.com. I'll show you it if you really want to. And he had predicted the '08 crash all over. It's all over the place. Great blog, tons of information. New post today, which I have not read yet. Sold his company, freaked out. He says that the FBI had contacted him to engage in a Russian spy and date her and to feed them information. He told them that she was going to meet with Donald Trump Jr. and they did nothing. They let it happen, and then he became quite concerned. So he's gone on. His buddy Warren Buffett encouraged him to go to the media and tell his story. He did that. He's fled to Indonesia. He's afraid of what he calls the deep state. And Here's a quote I pulled out of one of his latest pieces that may give us a hint at what's coming in the drama and politics stateside. I'll give you my answer ahead of time. I call, and I feel it only gentlemanly to tell you that I do, in fact, have 4 aces. As I claimed on TV, I was, in fact, involved in the Russian and Clinton investigations, and I promise it was all political espionage conducted by the deep state against our republic. The Russian narrative you have been spewing and the Clinton matters about which you have been living in denial are going to blow up in your faces. A scandal is coming that makes Watergate look like a tea party, and many people whose names you know and some you don't are going to be arrested and go to jail. And then our country's Department of Justice will have liberated our republic from the deep state which captured it. So we'll see how that plays out. Crypto getting a little bid with all the money printing that's coming around. Government controls. Chinese just announced their cryptocurrencies coming out. It's just a fancy version of their current currency, but now they can tax every transaction. They can throw money at certain users without having to use banks. So it'll just be a much more efficient system that will tie into their social credit system. However, this may scare people to want to get out of this controlled system and into crypto. So I still think crypto has a huge rally ahead, along with gold and silver. Here's the Chinese currency against the dollar, starting to get back to the high that we had just several weeks ago. At this point, I wish I'd already put on our futures trade. I've been waiting for a catalyst to jump into the short on CNH using the futures contract. The basic idea is we sell the currency at today's price and then use the futures market to buy it at a cheaper rate in the future. We make the difference. I was anticipating this could go from 7.1 to 7.4 for about a 4% gain on $100,000 per contract, so about a potential $4,000 profit. But that was really the low end of how far I think they could devalue their currency. You can see some of these moves are massive in terms of the devaluation. So I'm just waiting to see what happens with these trade talks. They're rushing out their guy who's mainly in charge of the trade talks today after their celebration yesterday, and that's in advance of the planned 11th meeting. So it is showing some signs of concern from the Chinese to at least slow down the escalation. I think from the Chinese standpoint, their goal is to just block all the attacks of the U.S. with the least work, least cost, and just survive. Because from their point of view, they've already captured the flag. They've got the golden goose. They don't really need anything from the U.S. at this point. If they can survive, they have a 1.4 billion person economy that will grow and make it out of any slump, and they don't have to worry necessarily about as much civil unrest between their leaders. Now, that said, the Chinese have had plenty of civil wars. They're awful, awful bloody, and they can last decades. So that does not mean President Xi does not have to keep his people happy, and if they go into a depression, that'll make it very difficult. So, got to keep a close eye on those trade talks. You can see this run up from 705 to 715. That would have been about $1,000 profit on that contract if we had jumped into it. I'm just not ready to do it until we get confirmation trade talks are breaking down. German bond we use to try to predict our yields. Now these have not reflected the crash in yields this morning. I expect these will continue to go lower until the Fed comes in there and starts buying up the debt. And they're going to start controlling the peg as much as they can to not let it get too low. If the interest rates get too low, that can create a ton of trouble for banks, pension funds, you name it. So we really don't want it to go all the way to zero. There's gold having a little sell-off. It's the Golden Week in China. They're probably one of the biggest buyers of gold at this point in time. Monday, that period ends, and I expect a huge flow of money into precious metals and everything else for that matter come Monday once the Chinese Golden Week is over. Silver, you can see Gold, you can see, is actually well above its all-time high or relative high over the last several years. And that's why we rotated into GDX. I'm expecting the spot price of silver to catch a similar gain, so that would put it up well above 20. Once it does that, expect us to move from SLV to SIV. Shanghai Composite having a pretty gnarly sell-off in September ahead of their celebratory week. I suspect that people buy the dip on Monday on that. SPY is selling off rapidly today, but I still don't think we have a crash in our hands. There's no Lehman moment. There's no big scare, just a lot of noise. And we're about to let the Fed clear out the balance sheets of all these banks and go into QE mode. So without major disruptions to all the trade routes that would actually cause these corporations to print bad earnings, I just don't see it. Also, the main buyer of the stock market's not your normal retailer or even your normal bank. It's actually the corporations buying these themselves and using the bond market to pay for it. And so LQD, the higher that goes, the lower the rates are for corporate bonds, and that means they're going to keep buying their own stocks back. So until this has a significant sell-off or we have a major scare that will last, I think it's going to be very hard to get a long-term pullback in U.S. equities, especially when it's really the top shelf product to buy in investment assets right now. The Russell 2000 and HYG are very correlated, and they're both looking pretty strong. This is what Stanley Druckenmiller uses to judge the health of the stock market. And so that's a wrap of what we got today. If you want to upgrade your portfolio to a real membership, call Dean at 505-322-7515. We'll take great care of you. Let's see if we got any questions in the live stream. Tom, how's it going? Anybody else still listening? We got 16 live right now, so that's great. If you want to say anything in the chat box, any questions, we'd love to take some questions now at this point. All right, guys. Well, tomorrow we'll be trading the SPY. Thursday, the TLT. We've got a webinar Wednesday for our paid group only. And Thursday, we have our freebie webinar for everyone. So hopefully you can join that. Remember, you'll get the email in your from support at portfoliobuilder.io. It's a Zoom link for a live webinar. We do unmute your mic so you can talk and chat. Oh, thanks for the compliment, Tom. Appreciate it. All right, guys, that's a wrap for today. We'll be going live tomorrow at the same time. Thanks again.